Now, sticking with the day's Sense news, improved operational efficiencies and cost management have boosted Metair's operating profit. But the automotive components manufacturer reported a slight decline in revenue from continuing operations, largely due to lower production volumes at local original equipment manufacturers. Metair CEO Paul O'Flaherty joined us for more on that performance. We kicked off that conversation unpacking the group's strategy.
So it was actually a fixture, right? We had to deal with our Turkish operation and sell that. Trying to operate in that environment was difficult. We then had to sort out our debt, which we managed to sort post year end and defer a lot of our debt. And then strategically we acquired AutoZone. So we needed to diversify our revenue away from purely OEMs, and acquiring a large company like that in the aftermarket was very strategic. So those were our big three strategic moves, I would say, in the last year.
All right. Well, just drilling into some of them, the Mutlu disposal, I understand that the aim of that was to de-risk, but the final proceeds of the sale were lower than anticipated. But even with that, would you say that the adverse effects of that business have been cleared out?
100%. I mean, it had debt that we were recording debt from them of about 1.3 billion rand. They had interest of 770 million rand, inflation that's out of control. So, we don't have to worry about it anymore, and really, thankful that we have that off our balance sheet.
Indeed. Well, shed some light then on your debt restructuring journey and what that looks like at this point.
So we had, at the end of the year, we had a gross debt of around 4.5 billion rand, and much of it was actually due this year. In fact, some of it on Monday.
Yeah.
And so what we've managed to negotiate is a deal where most of this debt gets deferred over 5 years.
Okay.
With about 1.6 billion of it that it needs to be paid in 2.5 years from the year end. So, that gives us runway to breathe. It gives us runway to improve our operations and grow into our debt, really. So we're really happy with the outcome.
And actually with that, I mean, what would you say your cash generation ability and muscle is at this point, considering, of course, that now you have this debt that you do have to clear within the next 2 years?
So it obviously looks better. So very dependent on the EBITDA we have to generate, and we're really focused on that. Then we have to really manage our capital expenditure as well as our working capital. So when we do all of that, and then only servicing mainly the interest bill, that's very helpful to us. It really gives us the cash that we need to manage ourselves.
You talk about managing your capital expenditure. What would then be your capex priorities in the short to medium term?
Yeah, so we obviously have safety issues and general plant maintenance that we must do, but all of our expansion capex is actually related to the OEMs. So if the OEMs, such as Toyota, are coming up with a new Hilux, all of the capital that's related to that, we need to negotiate with the customer who's paying what and when. And so all of our big investments over certainly the next 2 years, a lot of it is going into Toyota and supporting Toyota in their new models. So that is ongoing negotiations with them.
Well, let us drill then into the numbers. Revenue decline of 2%. What's behind that? But also, what is behind the tone of resilience that the company has adopted amid that decline?
So, because as you said, we're quite dependent on the OEMs. When their volumes don't come through, then we suffer. So the first thing we had to do was make sure that our factories are really flexible, and that we've got as little fixed costs as possible, so that if the volumes drop, we can fit into it. So the revenue drop you see was mainly due to Toyota's volumes dropping, because, as they've announced, their engine emission issues did affect their volumes, and they recovered from that at the end of last year. So we had to be really resilient in managing our operating costs and making sure we could cater for the lower volumes.
Yeah, I mean, just looking at the fact that you do depend on the OEM volumes, you've spoken about challenging operating conditions there. Are there any market shifts that could change the operating landscape significantly?
Yeah, so our strategy is to go more to aftermarkets and not be solely dependent on the OEMs. That's the one. The South African motor industry, and I think the Ford CEO and the Toyota CEO have said it. It's a struggling environment. OEMs and automotive in general is so important to South Africa's manufacturing and GDP and employment. And the industry is facing challenges. So government is working with the industry in terms of the master plan, in terms of the incentives and the rebates, etc. And it's a collective to make sure that this industry survives through the moments we find ourselves in. So we're all in it together, and whatever we can as Metair, as a supplier, help to reduce costs, help to be more efficient. That's the part we need to play.
And just lastly, Paul, I think we have about 30 seconds left. You talk about this year having been the fix year. And I'm wondering then, looking ahead to the next financial year, if then that should be characterized by a new phase of growth, as you're also talking about diversification.
It should be. We expect the Toyota volumes to come back. So there will be that natural growth. The rest of the OEMs will probably be flat on growth, but Toyota will certainly help. And then the AutoZone acquisition, certainly from a revenue perspective, that comes into our income statement. So we're focusing on the operating profit and we're focusing on the cash.
All right. Well, thank you so much for your time and for your insights on those numbers that came out from Metair. That was Paul O'Flaherty, CEO for Metair.